Welcome back to the channel, everybody. I am Mick Alphaneme. I hope you're all doing well out there. Walk with your chest poked out, your chin held up high, conduct yourself with confidence. We're coming into another business week and we're going to conquer everything in sight. We're going to exceed our goals. It's going to be a good week ahead. I already know it. So let's begin here with this little bit of information. It's from cryptonewsflash.com. And it's titled, Ripple joins forces with Blockchain Founders Fund to supercharge Web3 adoption. All right, let's read this little tidbit here. First bullet point, Ripple has grown to a reputable blockchain cross-border payment company with its RippleNet and on-demand liquidity programs used worldwide. Second bullet point, XRP price has gained. Oh, that I don't care about that little side at all. Until they flip the switch, until there's regulatory clarity, I don't care about these lower price actions. You know, it starts going up significantly, then it might be a little bit fun. But other than that, let's move on to some other information. It says Ripple Labs, blockchain and crypto payment company has announced a strategic investment in a Singapore. We were just talking about Singapore in one of those last videos. A lot of things happening. Singapore, a lot of other areas in that region. In a Singapore-based venture capital fund dubbed Blockchain Founders Fund. The strategic investment in Blockchain Founders Fund is reportedly meant to help early Web3 startups worldwide accelerate blockchain technology. According to the announcement, the fund by Ripple will be used by BFF to support high potential early stage companies. High potential. I told you, see, there's a few companies that do that. Ripple, Algorand, Hedera. They specifically target only the absolute best companies, projects, and that's brilliant. Not every company does that. Some companies, they're just throwing money out there just to say they're doing something. Hey, you have a startup, have some money. You have a startup, have some, and they're just hoping, they're throwing a bunch of darts and hoping to hit a target. Ripple doesn't do that. That's why it has been so successful. So let's move on here. So according to the announcement, okay, so let's skip past that part. It says to support high potential early stage companies that are building the infrastructure and products for decentralized finance. Notably, Blockchain Founders Fund is backed by over 100 Web3 focused companies, including industry leaders, investors, family offices, and leading financial institutions. Brooks Entwistle, Senior Vice President Managing Director at Ripple, commented, here's a quote, "It's clear that blockchain technology can transform industries. We want to see startups unlock the potential of blockchain technology and are excited to partner with Blockchain Founders Fund to accelerate startups that are creating world-class products with real-world utility for the global market." It says, one of the managing partners of Blockchain Founders Fund said the fund would go a long way in Web3 acceleration in the country and worldwide. Moreover, Singapore government has set clear crypto regulations to help grow the nascent industry. See, they said nascent. We're still at the beginning. I know crypto's been around for a while. It seems that way. But as far as mass adoption and where we can go, even in the development of the technologies, now that you have AI out, you have quantum computing. I mean, there's so many different advancements that are going to happen. I think they're sitting on a lot of different innovative ideas also, just based off a lot of things that we've read over the last week or two. So yeah, we're still in the nascent stage, okay? We're still in the beginning. Next section. Bigger picture of Ripple global investments. Ripple has grown to a reputable blockchain cross-border payment company with its RippleNet and on-demand liquidity programs used worldwide. The company is, however, struggling. Why do they always have to throw that negativity in there? Struggling with legal battles. Have you been following? Who wrote this? cryptonewsflash.com. Have you been following the legal case? Now, listen, we don't know what the outcome is going to be. I believe we're going to defeat the SEC, but that's just my humble opinion. But along the way, every pro has said we've had victories along the way. How are we struggling? So we're going to stop right. We're going to stop right there with that article. You want to read the rest of it? Once again, it's on cryptonewsflash.com. Let's move on to another little bit of information here, okay? So, of course, we have some stellar related information here. This is from Stronghold. Stronghold says happening today. Stronghold CEO Tammy Camp will be speaking at the FinTech Meetup in Las Vegas on the Innovations in Domestic Payments panel. This could be interesting. She will be joined by other forward-thinking leaders on the B2B. This is important. This could bring in some new partnerships, some big deals. It says she will be joined by other forward-thinking leaders on B2B payments and finance track. See you there. B2B, we're talking trillions. My money hair is starting to stand up on the back of my neck just thinking about it. I'm getting excited just thinking about it. So this is very good. All right. There's a lot of activities going on. You know, I think Stellar has some panels they're going to be on soon as well. I think maybe it's the Paris Blockchain Week, something like that. You have Stronghold here doing what they're doing. And of course, let's move on to this next little bit of information. You have Ultra Stellar, finally. Some more activity out of Ultra Stellar. Haven't heard from them in quite some time. Remember, you had Interstellar at one time active. Stellar Foundation was active. You had Ultra Stellar active, Velo. You had all these companies at one time that were doing different things. IBM, that was a great time period. So anyway, Ultra Stellar is getting active again. They released this tweet. It says, brilliant news, everyone. We are an official partner of Paris Block Week 2023. If you're in Paris and you want to learn about what we build on the Stellar network, you can find our booth near Discovery Stage. That part's not important to me. But what is important is they're getting active again. And all of these different panels that are going on right now could lead to partnerships, acquisitions, different things. And maybe we get some announcements in the next few weeks. And usually this is the cycle. All of these bank coin companies, they sit on a bunch of panels, they talk to a lot of different companies, and then slowly you start to see information coming out about things getting actualized over the next few weeks to months. So it's always good when we see this as a buildup, and then, you know, we have a climax, so to speak. So this is very good. And I want to see more companies that are building on Stellar come out, put some news posts out, get active, go to panels, become a partner, a sponsor of these different panels and things like that. Let us know what's going on. So this is very, very good in my humble opinion. All right, so now let's move on here. A little bit of LCX news. So this is one of the reasons why I firmly believe LCX is going to be a huge winner in the future when it comes to exchanges. They're fully compliant. This is a tweet that they put out here. It says, your T7 is a fixed yield tokenized bond. It says that is, it's compliant, it's regulated, endorsed by the regulator. Holy smokes. Passported across the European Economic Area. See, this is what LCX can do because they're fully compliant. Heck, if they become a bank, boom, the rocket takes off. But yeah, I keep that in mind. I always mention that because that's always on my mind. But as of right now, there's no one ahead of them. They have a long way to go. I mean, there's no one ahead of them as far as regulatory clarity. They already have it. They're good. They're in the clear. And as more and more big exchanges have problems, if LCX continues to promote itself and continues to streamline, they need to streamline everything. Make it easy. Make it easy to use your exchange, whatever offerings you have, your wallets, whatever. Make it easy to use and make it attractive to the eye. If they can do that, sky's the limit. But that's on them and we will see. We'll try to stay privy and abreast of what's going on. And, you know, we'll adjust accordingly. That's how we do. All right. So now we have this article here on Quant.network. And this little tidbit goes as such. It says at CNBC yesterday at Gilbert Verdian, speaking with Jordan CNBC, quote, we're seeing a transition to a new form of money, tokenized deposits or liabilities issued by commercial banks that will be followed by CBDCs. You see, there's a lot of money going to flow through some of these bank coins. But Quant is on CNBC saying this. That's powerful. That can reach a lot of minds, a lot of eyes. Now, also keep in mind that Quant has a partnership, I believe, with LCX, right? Or don't they work together? Quant is in deep with all the powerful projects, XRP, XDC, I believe, LCX, holy smokes. They're putting together a very, very powerful little network there. I don't want to say little, actually it's huge. I mean, amongst them, the banks that they're going to move capital for, or could move capital for, is astounding. So Gilbert Verdian was letting it be known like, hey, listen, crypto is the future. Crypto is sound. And you know what was interesting about this is that the interviewer kept trying to put crypto in a negative light, kept trying to blame crypto for the fall of these banks. And as we read in many articles, you saw the proof with your own eyes that crypto wasn't the reason those banks went down. Those banks were doing terrible business, mismanaging funds. And then with the Fed raising interest rates, they couldn't play their dirty games. Allegedly, they couldn't play their dirty games anymore. And that caused massive bank runs, first from big money clients and then from the regular people. So that's what happened with those banks going down. There's going to be more. There's going to be more. And as those banks go down, if that indeed does happen, we're looking at somewhere near 190. Now you have articles saying 200 banks are at risk. We went from the article we read was saying there was a range between 185 to like 190. It was something like that in the article yesterday. And now they're up to saying, well, we're up to 200. That's the articles I've been reading today. 200 banks at risk. Listen, those banks don't have anything to do with crypto. They continue to try to point the finger at crypto when really they should be pointing a finger at themselves. The legacy system is doing bad. The people are going to continue to come towards crypto, at least the bank coins. Because the legacy system is going down and they're going to need an alternative to be able to safely store their capital and move it around. They can store USD on these wallets. That's what they don't tell people. They think all the wallets, you have to only use that cryptocurrency. No, you have USD in some of these things. It depends on which wallets they're using, right? But that takes a degree of educating the people on what the possibilities are for self-custody wallets. They don't know that. It's just like with Coinbase card. It's the same thing. Like with Coinbase card, yeah, sure, you can use a bunch of different cryptocurrencies, but you can also just use your US dollars. So you can use Coinbase as an example. I'm just using this as an example. But you can use Coinbase like a bank account if you wanted to. The people don't know that. This is why crypto companies have to continue to talk to the people. Don't just pipe down, quiet yourself and run away like a coward. No, have some courage, stand on your square and talk to the people and give them the information that they need to make proper decisions, because you know the other side is not going to do that. The other side is going to give them misinformation. The other side is going to tell them lies. You have to bring that balance. But hey, so anyway, this was big. This was good for Quant. Gilbert Verdian's getting more and more active. You see a lot of the heads of Quant, a lot of the powerful people within Quant taking powerful positions on infrastructure, at the heads of infrastructure teams like in the United Arab Emirates, on Web3 governmental teams as well. I mean, Quant is accumulating a lot of power. We covered those articles here on the channel, but I'm quite sure that on your own, you go to quant.network, you can read all that stuff yourself. That's number one. But number two, I'm sure they're going to be talking more and more about those powerful positions as the months go on. Now, listen, as Quant is accumulating more and more of this power over Web3, over setting up infrastructures for big money places like the United Arab Emirates, as that continues, the potentiality for Quant's price only goes up. So now let's move on to an article here just from Cointelegraph.com. And it's in relation to Casper. So we get a little bonus Casper information here. We had an entire chapter in the last video from yesterday about Casper. It was a request. So I'm just going to slide this information in there as well. And it's titled, "Tokenized Mortgages Can Prevent Another Housing Bubble Crisis," says Casper executive. So let's read this little tidbit here. It says current mortgage term sheets lack transparency because they are not machine readable, according to Ralph Kubli, board member of the Casper Association. The 2008 financial crisis was a devastating time for many as the collapse of the United States real estate market caused ripple effects impacting the employment and livelihoods of millions of people. According to The Street, one of the chief causes of the crisis was the opaqueness of the mortgage industry. You don't say. Mortgages were bundled into packages called mortgage-backed securities, MBS, that could be bought and sold by banks and other investors who relied on rating agencies to determine how risky the securities were. The banks sometimes, quote, packaged AAA rated securities with lower quality ones, and these bundles were passed off as top rated securities when they were sold to investors, unquote. These investors didn't necessarily understand that they were buying low quality securities, which were likely to be defaulted on, leading to massive losses once the crisis revealed the truth. According to Ralph Kubley, a board member of the Casper Association, this fundamental problem that sparked the crisis still exists, but it can't be fixed through blockchain technology. Kubley hails from both the traditional financial sector, TradFi, and the crypto industry. He has previously worked in various mergers and acquisitions, sales and executive management positions at Sika, Starmine International, BCM Europe, and other companies. In 2021, he joined Casper Association Board, a nonprofit promoting the Casper blockchain network. He told Cointelegraph that tokenization of mortgages could allow them to become observable, verifiable, and enforceable, unquote, on a public blockchain, making the mortgage industry more transparent and helping to avoid the kind of surprises that arose during 2008 crisis. So in other words, what he's saying is what everyone else has been saying across the legacy system. A lack of transparency allows people to get away with some very, very bad activities, and transparency can remedy that. The way you can have transparency right now is through the blockchains, through the cryptos. Okay, so once again, this article is a very good article. They have much more here. It's on cointelegraph.com. Make sure to check them out. This was a very, very good article packed with potent information. So Casper is looking good. The company looks good. They look strong. They know what they're talking about. And if you have leaders like that, usually that's going to be followed with success. So now let's move on here to a little bit more news. All right. So here we have it. This is from the NewYorkPost.com and it's titled Bank of America said to buy Signature Bank. This is said by Bill Ackman. It says here, Bill Ackman in a tweet on Friday said Bank of America is going to acquire Signature Bank. A lot of you, oh man, another Ripple supporter, you know, another person that's in deep with Ripple, XRPL. But I would like to say, I hope that these big banks are going to be careful. Don't let these failing banks that you're purchasing, and don't let your arrogance upset what you have going on already. They have some deep problems at these failing banks. So I hope you have some solutions. Don't destroy yourself trying to save these individuals when we're so close to rolling out the new financial system. UBS is one of us. Bank of America is one of us. Like, if you have a plan, and I hope that you do, let's resolve these things. But let's not put ourselves in jeopardy when the new financial system is right around the corner. All that money will be flooding in, a new age of capital flow. Let's read this little tidbit here. It says, quote, this is from Bill Ackman, quote, I am hearing that Bank of America is going to buy Signature Bank on Monday. Unless and until we can protect uninsured deposits, the cost of capital is going to rise for smaller banks, pushing them to merge or be acquired by the SIBs. I don't think this is good for America. Well, I mean, I would agree with that, but also there's two sides to that. There's multiple sides to that, but two major sides. The other side is that no one did anything about it. No one did anything about it before. None of the problems have been resolved. There's no real changes in monetary policy. There's no real changes in the thinking that goes into implementing monetary policy. The regulations, there's either too much or they're too extreme or there's too little in certain sectors, certain areas with certain things. I mean, it's all out of control. It's all chaos. And there doesn't seem to be an organizer there. So I keep that in mind. It says, let's continue on here. It says, however, a source familiar with the matter told Reuters that Bank of America is not interested in buying Signature Bank. Okay, so they're all confused now. So he's saying they're going to buy Bank of America. Then Reuters, I like a lot of Reuters articles, even though they're just purchasing articles, really. That's what they're doing. They're just purchasing it from other websites and putting it on their website. But we'll see if they're right. Sometimes they can be wrong. They have been wrong at times. But Reuters says they're not interested. Signature Bank did not immediately respond to a Reuters request for a comment. Bank of America declined to comment because there is nothing is defined. Even the other day, when we were talking about UBS, they were saying UBS is going to buy the other bank, but then we got confirmation of it today. It was confirmed. So, that's usually how it goes. They have to keep things quiet. They're trying to figure things out, and they don't have time to field questions right now while they're trying to make all of these big decisions. So now let's continue on to another article here. So this is from swissinfo.ch, okay? And it goes as such. SNB, Swiss National Bank, offers $100 billion liquidity to UBS as part of CS deal. Liquidity. In the future, I don't think anyone's going to be able to offer more liquidity than, let's say, a Ripple or Algorand, as examples. We can do things like this better than they can without putting ourselves in jeopardy, because we can create the biggest liquidity cushions mankind has ever seen. Now, whether Ripple and Algorand actually do that, that's a different story. They will have to actuate that. But I'm saying that the potentiality is there, especially with Ripple. But let's read this little tidbit here. It says, the Swiss National Bank has offered UBS Group AG around $100 billion in liquidity to help it take on operations of Credit Suisse Group AG. Dow Jones reported on Sunday, citing unidentified people familiar with the matter. Details of the liquidity offer couldn't be learned, but are part of the talks to engineer a takeover of Credit Suisse. My apologies. The way they type this is so strange. UBS agrees to buy Credit Suisse for more than $2 billion. All right, so there you have it. They're offering $100 billion of a liquidity lifeline, right? How are they phrasing this here? They're not calling it a lifeline, but that's what it is. It's a lifeline. All right, so now let's move on here. Liquidity, liquidity, liquidity. We continue to hear about it. All of these banks lack liquidity. Now, one thing that the volatility in crypto does teach us is that crypto can raise liquidity quicker than anything else ever known. And I think that's going to come in handy in the future. Now, this article here is from coinedition.com and it's titled, BlackRock Chair Expresses Fear Over Follow-Up Financial Crisis. BlackRock has been coming out and speaking a lot lately. I think they're really concerned. I really do. Other than that, they usually keep quiet. It says here, Larry Fink, the chairman of the asset management firm BlackRock, believes that the markets are on the edge, despite the swift reaction by regulators to stave off contagion risk. It's already too late, but contagion risk in the wake of recent bank failures. Fink expressed fears over a follow-up crisis in asset liability, questioning if it could be the next sector to fail. The asset management chair shared his opinion about the market situation via his traditional annual letter to investors. In the letter, he noted that a lot has changed in the markets in the last 15 years. According to him, since the 2008 financial crisis, markets were defined by extraordinarily aggressive fiscal and monetary policy, leading to spikes in inflation figures that have reached levels not seen since the 1980s. We've heard a lot of people talking about that lately. It says in the letter, the chair noted that to curtail the spiking inflation, the Federal Reserve raised interest rates by nearly 500 points in the last year. He believes this fallout of unsustainable policies of past years has finally turned around to haunt the financial sector. I agree with that. According to Fink, despite the bond markets being down by 15% last year, it was not enough as the market still found floors underneath to fall to. Yeah, bottomless pit. He noted that the recent rate hikes, which are the most frequent since the 1980s, exposed cracks in the financial system. Well, that's only because they put out more money than at that time. They flooded the world with US dollars. Now they have to take them back. So they have to equally raise interest rates just as high as to meet how much they have to take out of the market. Let's continue on here. It says, Fink believes the failure of Silicon Valley Bank is a classic asset liability mismatch and the biggest bank failure since 2008. Fink said this quote, "We don't know yet whether the consequences of easy money and regulatory changes will cascade through the U.S. regional banking sector with more seizures and shutdowns coming," unquote. All right, so now let's move on to another article here. Oh, so here we go. We have an article about regulation, too much regulation. All right, so this is from Cointelegraph.com. Once again, they've been doing a great job. I'm just going to read this little tidbit. And the article is titled, "Peter Schiff blames too much government regulation for worsening financial crisis." It says finding the right balance between regulations and banking institutions is important for Schiff. Considering the Puerto Rico regulators closed down Schiff's bank due to non-compliance. Let's scroll down here. I remember when that happened. The recent fall of major banks in the United States and the need for federal intervention reignited discussions to identify the most effective ways to safeguard the crumbling economies. Comparing the episode to the financial crisis of 2008, everybody's been doing that. Let's skip that part. It says the 2008 financial crisis was primarily driven by collapse of the housing market. However, Schiff believes that the crisis was caused by, quote, too much government regulation. Let's read his tweet here. It says, when the government imposed lots of new banking regulations after 2008, hashtag financial crisis, we were assured that what is happening right now would never happen again. But one reason we had the 2008 financial crisis was too much government regulation. That's why this crisis will be worse. You know, I can agree with that a little bit, and not just in that aspect, but across the board. It just seems that the governments of the world, not just the United States, but of the world, they just have way too much power. They make way too many laws. They suffocate the people and the businesses with laws and regulations. So yes, I could see that. Everything just seems to be a little bit out of control, but it's up to the people to take the power back and say, hey, listen, you're going too far, and actually make a stand and do something about it. But hey, that's up to the people, right? Let's move on to this next article here. So this one here is from St. Louis Today, stltoday.com. And this article is titled, Midsize U.S. Banks Ask FDIC to insure all deposits for 2 years. Now, I heard a lot of people talking about this yesterday, and I saw this article, so I figured let's just cover it. I like to know the actual details. It says, the coalition of mid-sized U.S. banks, the Midsize Bank Coalition of America, has asked regulators to extend FDIC insurance to all deposits for the next 2 years. Bloomberg News reported on Saturday, citing an MBCA letter to regulators. The letter argued that extending insurance will immediately stop the exodus of deposits from smaller banks, which in turn will stabilize the banking sector and restore confidence in the banking system, the report said. I can see that. Yeah, I mean, this is a reasonable argument. I'd like to hear an argument against it. Let's continue on here. It says the collapse of Silicon Valley Bank, but I don't think the FDIC is going to do that. I just don't. Let's continue on. So the letter argued that extending insurance, the collapse of Silicon Valley Bank, which held a high number of uninsured deposits beyond the FDIC guaranteed limit. There's a reason why they had that limitation. I don't think they're going to change that. It says prompted customers to move their money to bigger banks and triggered sharp sell-offs in banking stocks. According to Bloomberg report, the group proposed that expanded insurance program be paid for by the banks themselves by increasing the deposit insurance assessment on lenders that choose to participate in increased coverage. The FDIC did not immediately respond to a Reuters request. Reuters is requesting everything for comment, while NBCA could not immediately be contacted. Missouri members of MCBA are Clayton-based Enterprise Bank, St. Louis-based Stifel Bank and Trust, Kansas City-based Commerce Bank, and UMB Financial Corporation, and Jefferson City-based Central Bank Company. So if you're with those banks, at least now you know that they're trying to take some sort of action. I personally believe that in the future, the only way that the banking system is going to find themselves out of this black hole that the central bank is going to continue to put them in, and that's what's been happening. It's a never-ending cycle. Is to congeal with the new financial system. It's the only way they're going to get out of this. And also you have a looming massive debt hanging over the heads of every entity and every individual in the United States. So you have that as well. And then we'll see if they come up with a deal with that. I'm quite sure that they will, but they're going to take that down to the finish line, in my humble opinion. And so there's a lot of problems that have to be solved. And I think that only the new financial system can do that. Just my humble opinion. Just my humble opinion. So now let's end off here with a little bit of gold news. Okay. So this is from economictimes.indiatimes.com. And it's titled Gold Parabolic Rise on Continued Worries About Banking Sector. Of course. Everyone retreats to gold when things get tough. Right. So it says here, gold closed the week with a humongous gain, nearly 7% at $1,989.34, as globally investors become increasingly concerned about the stability of the financial system due to the shaky and fragile looking banking sector. Shaky and fragile. This is coming from economictimes.indiatimes.com. And they're calling it shaky and fragile. But for an entire year, the legacy system media was saying, hey, no, the banking system is completely fine. They're strong. Crypto is weak. The banking system is okay. You even had one of those high political people. I'm not going to mention their names, but one of those high political people say the banking system is going to be fine. We did what we had to do. Are you serious? Are you sure about that? So, I mean, but the people who are actual pros know what the truth is. It's fragile and shaky. All right, let's continue on here. It says, with the closures of 3 U.S. banks and Credit Suisse on the verge of shutting down, the global banking industry is under critical scrutiny. Let me scroll down here, see if we get a little bit more gold news. We know that already. It says the dollar index was 0.70% lower on the week as the index closed to 103.52, while 10-year yields tumbled nearly 8% as the 10-year yield settled at 3.438%. In the present scenario, gold can easily move past $2,000 level on heightened concerns about the stability of the banking system. However, critical analysis of some of the factors show that gold bulls are probably overreacting to the situation. Really, it says gold may find it difficult to sustain this exaggerated rally should this crisis become all about specific cases. That's possible. That's definitely possible. We'll see how it works out. It doesn't change the economic situation. It doesn't change the situation of the United States debt. It doesn't change the situation of the global debt. It doesn't change that all of the systems, the legacy systems, are antiquated and they're not functioning properly, and corruption has run rampant through the systems. There's a lot of mismanaged money. It doesn't change that. So when all of that begins to kick in again, even if things start to go well in the short term, which I doubt, but that could happen. But even if things start to go well in the short term, in the long term, it still doesn't look good, which would drive people back to gold, and that gold price will go up again. So yeah, if things stabilize a little bit, I would expect people to liquidate and go back into whatever they were using before. Fiat support is at $1,960 and to $1,937. Resistance is at $2,000 to 2025. All right, so now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.